The dollar versus Canada tried to stretch higher in the European session, but ran into resistant sellers against a key moving average. The subsequent move to the downside has the pair now down testing a key swing area. I'll talk about both of those levels in this video and what's to come. So let's get started. I'm going to focus on this hourly chart, and as you can see, I stretched it out a long way. Why? Because I wanted to put in my patented red box right here. This red box is where most of the trading has occurred in the dollar versus Canada. Yes, there's big, huge spikes to the upside here, here, and here, but the spikes become less and less as the time goes by. These are tariff-related spikes. Trump threatening Canadian tariffs on Canadian goods, and that may still happen here, although there's some pressure off of the tariffs of late, which has this dollar Canada moving out to the downside and trading here today. In the process, we move down to the low of this red box right through here. That low red box comes in at 142.68 to 142.78. As you can see, the price low in trading here today has come to the high of that swing area at the lows. And if we do break below the 68 level, that would open the door for further selling. But we have this 100-day moving average. That's the that comes in at 142.52, not far away from the 68 level. So there is some key levels on the downside that would need to be broken to increase the bearish bias for the dollar versus Canada. When was the last time the price traded below the 100-day moving average? Well, going to the daily chart, the last time the price traded below that level was going back to this day right here. That's October 9th, 2024. So it's been quite a while since the price has been below that level. So getting below that level would increase the bearish bias. By the way, the 38.2% retracement is at the 142.68 level, which is right near a familiar level off of the 4-hour chart, that is, or the hourly chart, that is the that swing area that we talked about right through here at the low of this swing area, and low of the red box right through here. So getting below 68 level gets below the swing area, gets below 38.2, and then we have the 100-day moving average on the downside. Now on the top side in trading here today, as mentioned, the 100-hour moving average did hold resistance at is the blue line in this chart, comes in 142.29, and the 200-hour moving average comes in at 142.43. It looks like maybe a little bit lower than that. The 50% retracement of the move up from the low price in February to the high price in February comes in at 143.45. So this cluster of technical levels up here would ultimately need to be broken on the top side to increase the bullish bias for the dollar versus Canada, the bearish bias for the Canadian dollar. That may come if Trump changes the story about Canada once again, and we start to see a spike or a move back higher in the dollar versus Canada, a move back higher in the U.S. dollar as a result of inflationary pressures from tariffs. There you go. So that's my technical look at the dollar versus Canada. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.